to oil prices, where the oil price was pushed higher today as Russia and Saudi Arabia urged OPEC Plus members to adhere to an agreement on production cuts. The gains came after Russian leader Vladimir Putin visited Saudi Arabia and met Crown Prince Mohammed bin Salman. In an early morning trade, Brent crude, the international benchmark, added 1.6% to trade at $75.20 per barrel, while U.S. marker West Texas Intermediate rose 1.4% to $70.33. However, oil remained on course for the longest weekly losing streak since 2018 on concerns about a global glut. Well, Arise business analyst Bode Ososami is here with us to dissect all of this exciting market information. Bode, welcome to Newsday. Very good afternoon to you. Now, straight into it, your thoughts on the news from the Dangote refineries. Are we on track for a successful project?
Well, I think on track, yes, given that we are now at a very critical stage, but it's still early days. Definitely a very important and major project with many risk factors, and what is good is the transparency, the need for transparency, and the culture of regular progress reporting. So this press release that we saw this morning, quite encouraging, announcing the very first phase of crude delivery that will sustain the initial 350,000 barrels per day. Nigeria desperately needs this refinery to work, and the government definitely needs to continue to support and provide all the necessary incentives. But there has to be transparency also around these support and these incentives. And of course, in exchange, Dangote has to see himself as much more accountable. This, of course, is a private company, but with the level of government support, we need to know on a regular basis how this project is going in terms of delivery. The environment for the project has also somewhat improved with the removal of unaffordable subsidies. And there are questions that Nigerians will continue to want clear answers and, most importantly, updates. For example, when are we projecting the first output of refined products? Of course, we know that will depend on the first run and the test, but we need to have a continuous update on that on a monthly basis. We also need to know the progress on the initial runs, and more importantly, confirmation on steady crude supply arrangements after this first 6 cargoes. Mind you, 350,000 barrels per day is just 53% capacity. If you do the economics, this is going to destroy margins. You really need to operate more like 70-75% at least, if not even higher, to be able to make your money back. So some of the details on the economics, profitability, working capital are important, and we also need to know and how quickly are we going to see the ramp up from 350,000 to 650,000. Meanwhile, I do congratulate Aliko Dangote on this first major milestone. This may be his most scrutinized project ever, only because it cannot afford to fail, and Nigeria has put a lot into it to support the effort. And on transparency, one thing I must say, it's not bad if there are hiccups along the way. What investors and analysts do not want is our surprises, cover-ups, or opacity. So the more upfront on challenges, the better. And Nigerians need to understand that projects of this scale can have difficulties starting up, given the technical complexity, sheer scale of operations, working capital needs, gaps. It is a huge effort, and I just hope it goes well. But the most important thing is that we continue to monitor the progress, and we continue to see this level of transparency in letting Nigerians know how things are going and what the challenges are, if indeed there are any.
Right. You sound cautiously excited, and I believe that most of us are in the same boat and, of course, wishing for the best. But now let's turn our attention to Europe, where, of course, we got the German inflation data. Now, do you feel inflation is still confirmed to be plunging in Europe's largest economy?
Yes, but talking about data, we also just now got the US payrolls data. It rose 199,000 in November. Unemployment rate also fell to 3.7%. percent. 199,000 was much higher than the 180,000 thereabouts that was expected. So you've seen Dow futures falling 100 points as this data came out. That's in the US. We'll talk about that when, of course, the market opens in about an hour. But on Germany at 3.2%, November CPI rate weakened, which is where you want it to go for the fifth month in a row. And the inflation rate, if you exclude food and energy, it came in at 3.8%. And according to the president of the Statistics Office, Ruth Brand, she said that in October and November, many energy products, in particular, that's in 2023, were cheaper than a year before. So there's a bit of a base effect there. And non-inflation for food also continues to mellow, but still well above the overall inflation. If you look at the specifics, the main downward pressure came from a sharp downward slowdown in food inflation, 5.5%. That's what we saw compared to 6.1% the previous month. Also, energy prices, we actually saw a decline of 4.5, that is minus 4.5, compared to minus 3.2% in October. Like I said, that is due to the base effect. Prices for goods overall increased by 3% in the period from November 2022 to November 2023. Services inflation moderated to 3.4% from 3.9% the previous month. Lower inflation, of course, is good news for the economy. It gives the European Central Bank comfort as it contemplates when it's going to cut rates to boost the economy. At the end of October, the ECB held its interest rate steady at 4% after 10 consecutive hikes, starting, I think, as far back as July 2022. There is a meeting on the 14th of December, and Lagarde already said last month that we shouldn't expect to see cuts yet, that she still expects inflation to rise, even as subsidies on energy prices will be removed. So we shouldn't see rate cuts before the next couple of quarters. But this obviously is good news.
Right, now over to the wonderful world of AI. It seems AI stocks seem to be closing the year with a big bang. Now, we saw yet another AI-driven spike on the Nasdaq at close of trading yesterday. Can you give us a little bit more insight on this?
Yes, wonderful world. Indeed it is. I mean, all the news that seems to be coming out from Wall Street, the big news seems to be coming from AI. Advanced micro devices rallied yesterday, up 9.89%. It was among the biggest gainers on Nasdaq Composite, took the composite up after they announced the launching of their new Gen AI chip. They call that Instinct MI300X. And according to them, this uses algorithms trained on data to produce adaptable models that can perform a variety of complex tasks. And it's quite, from a technical perspective, a breakthrough. And the market recognized that 9.89% spike yesterday. Also, Alphabet on Wednesday provided another extra push with the release of its AI model Gemini on Wednesday. Shares of Alphabet also finished 5.3% higher. And there's going to be a Gemini Ultra that will be unveiled in early 2024. Gemini Nano is also coming out for smartphones. And according to Demis Hassabis, is the CEO of Google DeepMind, Ultra outperforms other AI models, they say, especially human experts' knowledge in a combination of 57 subjects. But still, many say Google is late to the AI party, but definitely they see the huge opportunity. But one thing I must add is not all tech stocks touting AI themes are doing very well. Broadcom's stock actually fell after it reported earnings per share of $11.06 for the fiscal fourth quarter, which topped consensus for $10.96 a share. What I think we are seeing is an increasing divergence in reception of AI-related plans and news. Many are asking, so what? Digging deeper into the numbers. Today, the futures on many of these companies also were positive, but I noticed after the news came out on non-farm payrolls with that higher than expected number, Dow futures, Nasdaq futures, and SIP futures took a dip, and I think that also affected a lot of the AI stock.
Well, looks like 2024 is going to be another big year for artificial intelligence conversations. Arise business analyst Bode Ososami, thank you so much for your time. Now, you're watching Newsday. Plenty more still ahead. Do stay with us.